Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you had a very beautiful weekend as well. And in today's action, a very big and broad green day in the markets. The S&P up 1.5 and the Qs up a very healthy 2.21. Now, of course, the reason behind such a very pronounced rally was the fact that yesterday evening, we finally got the possible end to the government shutdown. The Senate voted yesterday night to reopen the federal government. That was the preliminary vote yesterday. It went again tonight. They passed it again. Now, the only thing that stands between us and a reopened federal government is the House, which will be coming later tomorrow, and finally, President Trump's signature on the whole ordeal. So this does remove a big uncertainty catalyst that we were kind of commenting on over the course of the past few weeks. You might remember where we derived the current bearish narratives in the market versus the longer-term bullish tailwinds, and the government shutdown was a very big one. However, although the government is reopening, we are still going to have a big probable data dump in terms especially of the two non-farm payroll reports that now we have missed. So still uncertain as to when those jobs reports will be released, whether they're going to do them in December as a one lump batch or whether they do them on an accelerated fashion, possibly in the next week or so. I was checking the website for the Bureau of Labor and Statistics. Still no indication of that on the timeline just yet, but it does do a good job of removing a big uncertainty catalyst. And we could check off a few of these catalysts recently. Number one, the markets were very extended in terms of the technicals. They have now since corrected. You might remember me saying just last week, we touched the 50-day EMA on the SPY, big institutional level and big algorithm level as well. That was also a touch of the 12 EMA, something that we had not done in roughly over a month and roughly not at all since the April tariff lows. So that is checked. This is checked off as well. The jobs creation softening. Well, we're just going to have to wait for the non-farm payrolls report for that. And finally, a few weeks ago, we were able to check off the China tensions too. So slowly but surely, we're checking off boxes here in the bearish narrative camp. And as a result, the markets are currently broadening out a little bit, and you are seeing quite a decent amount of lift. So in today's video, we have a few things to take a look at. Number one, I'll be taking you guys through two company earnings, some fun ones. Number one, we'll be talking about CoreWeave, and number two, we'll be talking about RocketLab. Now, I know there's tons of other fan favorites out there, such as Rigetti, Big Bear AI, ASTS, TeraWolf, and a whole host of other fun companies today. But for tonight's action, we will just be focusing on CoreWeave and RocketLab. So after that, we will get into our technical analysis and check on the rotation in the markets, the SPY, the Qs, and our minor sectors. Where's the money flowing into, or is the market just getting more broad as a whole? We'll take a look at your sector rundown in part number one. Then after that, we are going to take a look at our big tech name list down here and derive of these companies, which of them are possibly good swing trade entry opportunities and which other companies could be good for long-term portfolio buys. After we're done that, towards the end of the video, we will take a look briefly at our biggest gainers and losers of the day. Many companies, big green today, but we also had some kind of companies falling off, and some companies just haven't really done too much in the past few weeks. So we'll have a look if we can find some opportunities and which of these companies I prefer the most leading into the end of the year. And that'll be it for today's video, guys. So without further ado, let's jump right into it. The SPY up 1.5, the Qs up 2.21. And look at this beautiful market breadth. This was arguably one of the better market breadth days that we've seen over the course of the past 2 weeks, led of course by big tech. Beautiful rally recoveries by a lot of these companies that have been taken down over the course of the past 2 weeks with the uncertainty in the markets. Nice day by financials as well. Healthcare, not too bad of a day. Once again, Eli Lilly carrying the entire sector on its shoulders. The biggest losers in healthcare, guys, once again remain the health insurance plans. That is obviously because of what happened in terms of the government reopening, right? No renegotiations on the healthcare plans that the Democrats wanted. So of course, that is going to hurt some of your healthcare insurance companies overall. And the bottom half of the market not performing too poorly. Consumer defensives still remain excessively soft as most of the money is rotating into tech and growth once again. The bottom half, though, not too bad. Consumer defensives remains one of your softer sectors out there. In terms of your one-day relative, you can see that even better. Almost everything pushing higher up and to the right. Technology, communication services, 1 and 2nd position respectively. To the downside, sadly, real estate and once again, consumer defensives remains a little bit weak. On the 1 week relative performance, guys, this is much better than we saw at this same time last week. You now have more breadth, more market participation across all of your major sectors here. The only ones getting left behind a bit, industrials, consumer cyclicals, which didn't have the best earnings, right? Just remember some of the apparel companies, some of the fast food restaurant brands, definitely not the best. And surprisingly, technology, because they came down so much, they are still not fully recovered just yet, but overall, much better market breadth. If we take a look at some market breadth indicators, the percentage of stocks above their 20-day EMAs now back into the 40s. So we've been curling here in terms of the stocks above their 20-day EMA, which is a short-term gauge of market breadth and momentum. If you continue getting some lift here, then you could see the markets pull a little bit higher in a less concentrated fashion, which is the best case scenario when the S&P is searching for new all-time highs. Percentage of stocks above their 50-day EMA, you can also see the curl happening right here. Some of the best market breadth that we've had in about a week and a half of trade. You want to see this continue to push, and the only way this will push higher is if you get more broad market participation, more days such as today, and hopefully with the fact that the government shutdown has now ended, maybe there will be more certainty to deploy money in more aspects of the market rather than just focusing and concentrating on AI. Percentage of stocks above their 200-day EMA at a 54% read. Not too bad. Some of the best numbers we've had in the past 2 weeks. You will also want to see the short-term momentum carry for more than a few days. This is the only way that you're going to get some big lift on the percentage of stocks above their 200-day EMAs. So we're recovering, right? It is a nice start. The S&P with a very sizable bounce, the QQQs as well. Will the bulls be able to convert this into a brand new daily uptrend and just continue the weekly uptrend into new all-time highs? We'll take a look at that a bit later in the video. For now, though, let's dive into our earnings presentations right away. And we're going to start off with a very fun company. We are going to do CoreWeave. So CoreWeave coming out with their earnings after the close, and we had a bit of a pop, and then we had a bit of a drop. Unfortunately, CoreWeave after earnings down about 6%. But it's not because they didn't have good earnings this quarter. They increased their backlog, and they were overall very good numbers on revenue. However, the guidance for next quarter disappointed for one key reason that I think maybe the market is slightly overreacting to. Moving on to the numbers right now, you'll see that EPS here, very nice beat. They were supposed to come in at minus 40 cents per share. They came in at only minus 8 cents per share. So this company is on the verge of profitability, something that people weren't really expecting until 2026. Revenue, nice beat there as well by about 6%. Some of the easy numbers for CoreWeave real quick. Revenue was up 134% per year. Look at this expansion in revenue, man, over the last year. Really strong numbers for them. Backlog, 271% year over year to 55.6 billion. Look at the improvements quarter over quarter in the backlog. Just last quarter, we were at $30 billion in the backlog. Now, 55.6 billion. That is literally their entire market cap currently in the backlog, which leads me to believe that this company is underappreciated by the market, and it probably is one of my go-to bets to bet on for the next 2-3 years, but I'll explain more as we move on to or through these earnings. CapEx was actually down 14% year over year. The guidance for the end of the year is still between 12 to 14 billion. Adjusted EBITDA margins are not terrible either, and the adjusted EBITDA number has been moving slightly higher progressively, which is also a sign that the company is on the verge of profitability. So why were they down? Well, let's have a look right here. CoreWeave stocks slides on weak guidance, even as revenue more than doubles. Let's move into it. CoreWeave's growth is tied directly to the AI boom as the company rents out NVIDIA GPUs and has won business from leading cloud infrastructure providers, including Google and Microsoft, and recently Meta as well. The company's backlog now stands at 55.5 billion with 2.9 gigawatts in contracted power, up from 2.2 gigawatts on June the 30th. This is massive amounts of contracted power, guys. The biggest by far in the game right now. Now, not all of that contracted power is currently online. They currently only have just about, let me show you guys, 590 megawatts, which are actively, but they do have right now roughly 30 operational data centers across the world with expansion up to 41 data centers, one of the biggest neo cloud data center providers in the world. However, CoreWeave now sees 2025 revenues coming in between 5.05 billion and 5.15. The estimate was 5.3. This element of guidance for Q4 into the end of the year is the reason that the stock is down right now. Why did that happen though? Well, they explained it on the earnings call. A third-party data center developer is behind on schedule, meaning the construction timeline is being pushed back a little bit. But he added, the CEO added, that the delay won't affect CoreWeave's backlog at all. There was a problem at one data center that's impacting us, but there are 32 data centers in our portfolio. As I said, they're building another 9 further, and as a result, their total portfolio will be about 41 data centers when they're all completed. During the quarter, CoreWeave announced $6.5 billion in expansion of its business with OpenAI and a 6-year deal with Meta worth up to $14.2 billion. CoreWeave also received its 6th contract from a leading hyperscaler. A concern with this company just about a few months ago was that they were very concentrated with just a few key players. Now, the business is more diversified in terms of its customer count and overall revenue streams, which is also something that you want to see for the business. The company remains supply constrained, and the overwhelming majority of the delay that you're currently seeing should be taken care of within Q1 of next year. So apparently we'll have to wait a little bit longer for some gains in the share price. We know that CoreWeave has given back the entire rally to the all-time highs from the high 180s all the way back now after earnings to 100, but it is a very nice potential opportunity. Let's go over a few more slides. You'll see here that adjusted net income is only a 3% adjusted margin loss, which is not terrible. They're kind of thinning the loss further and further. Last quarter, we were down about 11% in adjusted net margins. You can see the clear revenue ramp, which we already covered, very, very solid. The increase in adjusted operating income, which is also good, 16% adjusted operating margins. So that is also a very healthy win for the company. The adjusted net income loss has swung from very negative to now back to almost positive, very solid as well. EBITDA as well, up and to the right, 61% EBITDA margins, which they will be able to improve upon into the future too. Revenue backlog, as we can see, a lot of the commitments here are in the 24-month camp, so they'll be able to bring on a lot of capacity online within the next 1 to 2 years. But you also have a ton of the backlog, which is for pretty much the next 2 to 5 years. But it's always good to see them have such a wide pipeline, and I definitely don't think that that pipeline is going to be finished anytime soon. I think they'll be able to increase their remaining performance obligations even more over the next coming quarters. Capital expenditures remains roughly in line with what the guidance had been previously, but they do say that 2026 CapEx will be a bit heavier because keep in mind, they have to build a whole bunch more infrastructure and have to purchase a whole batch of new GPUs to kind of serve that large backlog that they do have. Here's the distribution for all the data centers, 41 across the world, several in Europe, but most of them across the United States, 590 megawatts of active power and contracted power for all that backlog, 2.9 gigawatts, which is absolutely massive for this business. So the next question we should be asking ourselves is, with the fact that they have a lot of debt, most of which, by the way, is the term of that debt is 2028 and 2029, they've been able to get more favorable financing rates as of recently. So I don't believe the debt is going to be a problem for them. They have the revenue in the pipeline and they have the gross margins and potential future operating margins to service that debt down the line. They do have a lot of CapEx right now, but it's normal because they're building out the infrastructure similar to other companies such as Iris Energy or Nebius or some of the smaller players as well. And they also have lower concentration risk too. So the debt isn't necessarily a problem for me, especially in terms of their longer term expansion. They also have a direct deal with NVIDIA, of course, and NVIDIA is one of their invested partners into the business as well. Revenue growth on average through 2028 is going to be about 70% per year, which is absolutely massive, guys. In 2028, the estimates for this company is that they will be bringing in almost $26 billion in revenue. The market cap of CoreWeave right now is sitting at $52 billion and a bit less even in the after hours. In my opinion, this is one of the more fairly valued plays in terms of price to sales moving forward if we have a longer term time horizon for the expansion of the business into 2027, 2028, and possibly beyond as well. In terms of their current price to sales, around $100, you're trading at a 4. That's very small, guys. In terms of forward price to sales for 2028, you're trading at 2 times 2028 forward price to sales. And as the company told you themselves, they cannot keep up with demand. And NVIDIA has commented on this as well. Since they are a direct partner of CoreWeave, they even say that NVIDIA has so much demand, a lot of other chips will be going to CoreWeave, and CoreWeave as well just has too much demand as well. And keep in mind, NVIDIA has agreed to backstop most of CoreWeave's free capacity. If CoreWeave can somehow not rent out their capacity, NVIDIA will buy it from them. So it's kind of like an insider deal type of thing, but it does give a nice backstop to the company. In terms of forward estimates here on the share price, I mean, if you just give this company a very fair price to sales multiple by 2028, you're going to be sitting around you're going to be seeing around a $130 billion market cap, which should give this company a $246 share price. I'm being very conservative, guys. We can run, enterprise EV to EBITDA, cash flow models and stuff like that. But if you just take straight line price to sales and say, listen, the company currently at 5 price to sales seems to be what Wall Street agrees on. It's a compressed valuation. At 5 price to sales, if we can get up to $246 per share, that'll be pretty good. And if they somehow are able to expand their price to sales in terms of their multiple expansion, right? You're basically at close to $500 per share. This is like the big bull case. This at 5 price to sales is the base case. So there is a very nice risk to reward profile on this company. And yes, I will be accumulating more shares at $100 or slightly below $100 as well, but it is a long-term play because some of these companies can be very volatile in the short term. That's everything I had for you guys for CoreWeave. Hopefully you guys enjoyed. Definitely take a look at how much contracted power they're able to put online over the next few quarters. It's the same analysis, whether you're looking at CoreWeave, whether you're looking at Iris Energy, whether you're looking at NBIS, whether you're looking at CIFR, right? It's all about how much money do they have in the backlog and how fast can they get that power online. A lot of these companies, some of their deals will only be put online truly by late 2026 into 2027. So that power output from them, or rather the compute output from them, is going to be had in the next roughly 12 to 18 months. So keep that in mind for some of these companies. Moving on to RocketLab. RocketLab, another fan favorite company, solid company, what they call the mini SpaceX, came out with their earnings today. And as a matter of fact, they had a really nice boost, up about 8%, 7-8% after their earnings. And they had pretty good numbers here, beating on EPS. The expectations were to come in at minus 10 cents per share, and now only minus 3 cents. So this company as well, getting very close to profitability. Revenue also beat by about 2.11%. Now, a big focus on RocketLab this quarter was whether or not they were going to be able to put out essentially their Neutron rocket. The Neutron rocket for them is the very large rocket that's going to compete with SpaceX. I'll explain what this company does essentially in terms of their product offerings, but a big focus from investors this entire year was, are they going to be able to get the Neutron rocket to the launch pad and for some initial testing, right? Because these have the constellation satellites, right? Something that the telecom providers want to do, essentially just building a satellite network for communication purposes. This is the type of rocket that can deploy that size of satellite. As of right now, RocketLab has 2 current offerings, smaller offerings, right? Which currently are the Electron rockets and the HASTE rockets. The HASTE rockets are for military testing purposes. They get about $15 million on average from every launch from, military contractors when they want to test some equipment and some ballistics properties. And the Electron rockets are for what you call CubeSats. They're very, very, very small satellites, just like this, for other purposes or whatnot. And those get about $10 million, about $7.5 to $12 million per launch. This is the amount of revenue that the company makes on average for every one of these launches. So there's smaller launches, right? But that being said, a big focus is going to be on the Neutron rockets that will rival SpaceX's Falcon 9. SpaceX makes about $70 million in terms of revenue on every one of these launches. RocketLab is trying to come in and undercut SpaceX, targeting $50 million in revenue per launch overall. Unfortunately for this company, though, the investors were assuming that they may have this ready by Q4, so by end of this year. Unfortunately, what the company said during its earnings call is that, they will only be able to have a launch, or rather, the launch prep for Q1 of 2026. That's only prep. So you would assume in terms of launch, it'll be in the second half of 2026. So kind of delaying the expectations a little bit. If they would have said that the Neutron was ready for Q4 and have possibly some launch prep by the end of the year, I think the stock would have probably been up a lot more, but that's just the context of the company right now. In terms of your numbers, revenue was up 55% year over year, launch backlog up to $510 million, which is very attractive. The number of Electron launches, 4 new launches. You can see that they launch about 4 or 5 every single quarter. So it does contribute to some good revenue for them. Adjusted EBITDA margins, guys. They're trying to get to positivity, but not just yet. They need a little bit more scale. And as a result, your adjusted EBITDA numbers are minus 26 million. It is a slight improvement, but once again, the company's sales pipeline is a bit choppy, right? It just depends how fast they can scale their launches. So that's why it's a little bit tricky for this company. That being said, the guidance was pretty good. The estimate for revenue guidance for next quarter was 172 by Wall Street. Company said 170 to 180. So the midpoint 175 is better than the expectations. They are getting better at GAAP gross margins. This is a record for the company. This quarter, they had 37%. The guidance is for 37 to 39, which is very strong as well. And they will be narrowing some of their EBITDA losses progressively over time too. So not that bad at all for RocketLab as a company that's still very early in terms of scale. We know that SpaceX is a lot bigger than them and has a lot more volume, but this is arguably competitor number 2, the up and coming competitor. So here we have the path to first launch, what they're trying to do, delayed unfortunately into Q1 of 2026 with the first launch possibly being in the second half of 2026. They included some very pretty pictures, guys. If you want to look more into RocketLab, it is a very interesting company. It's true that it trades a little bit rich right now, but I'll show you, if we give it some context in relation to what they can do with versus SpaceX, the valuation might make sense for a very long-term investor, right? It's going to be choppy, but it might make sense. The review of the revenue and gross margins, we can see here, revenue up and to the right. They've been doing a good job of scaling revenue. And if I show you the expectations for revenue into forward years, you can see here that revenue will be going up substantially, right? Doubling of revenue from this year all the way through 2027 and then beyond. So very fast revenue growth rates. And the path to profitability is supposed to be in 2027. That's when they're going to generate their first positive EPS year. So looking forward to that. And investors in RocketLab have something to look forward to as well, but they are protecting their gross margins. You can see from this same time last year, their gross margins were, I'm sorry, maybe you can't see, they were 27%. Now they've raised that 10 percentage points higher to about 37%. So they're doing a good job, right? You would love to see this business scale even faster, but for what they're doing with the cards that they have in their hand right now, they're really making good use of that. Revenue backlog up to 1.1 billion, very solid. And in terms of the in terms of commercial versus government, 57% commercial contracts and only 43% are government contracts as well. Very solid, guys. 1.1 billion in terms of a backlog. That's good. That's like 2 years of this year's forward revenue for them. Very solid. Going to contribute to that revenue growth in the future. So that's pretty much everything we had in terms of comparisons, between the different rocket offerings and between their numbers for earnings. You can't look into it too much because a lot of it is forward projections, right? And just continuously improving margins, continuously improving their revenue backlogs as well, and just continuously testing their technology and really getting ready for the big Neutron rockets. This is going to be the biggest revenue driver for the company, but that may only come, as I said, in the second half of 2026. So that being said, guys, in terms of the valuation, we know that RocketLab has, well, metaphorically launched here in terms of stock price recently, right? But is it still an attractive buy in the 50s? You might remember that I do enjoy participating in this one when we have big pullbacks, guys, to some of the either monthly EMAs, which we haven't had just yet, or just back testing some price. I don't like buying this one when it's too extended from our short-term price, but down here it could make sense. You're close to support. If you have a very long time horizon, guys, this is what you're looking at, right? The SpaceX revenue currently for 2025 is about $15.5 billion. The valuation of the company in the private markets is they trade at 22.6 forward price to sales. Now, unfortunately, guys, it's tough to find some comps. The only comp truly out there is SpaceX. They're the biggest one of them all, and they do have very similar product offerings, right? Revenue growth for this company through 2028 is about 34% per year. We can't do an EPS analysis because they're not profitable just yet. Their forward price to sales for 2026 is 27.76. it's a high price tag to pay, right? And even their forward price of sales for 2028, considering 1.42 billion in sales, that might be low. You don't know. It depends how fast can they scale their Neutron offerings. And we don't have guidance on that just yet, which is why I say it's tough to estimate forward price targets for this company, right? So it does trade high right now. The only way, in my opinion, that you can invest in RocketLab right now is the fact that they're a $25 billion company and you have a 5, 7, 10-year time horizon on it in terms of trying to catch up to SpaceX, right? This could very well be a $50, $75, $100 billion company in the making. But since a lot of that market cap expansion will be contingent on the successful launch of Neutron, how many contracts they can get as well, and just the overall budgets of governments and telecom providers alike for space launches, because you don't know, right? Sometimes it's a cyclical business as well. So there's a lot of unknowns, but is RocketLab a decent bet here in the mid-50s? If we have a longer term time horizon and we're trying to take it as a competing play to a SpaceX in an ever growing space market, well, the answer is yes. However, it will be very, very volatile. The best thing that you can do currently, guys, is set aside a budget that you'd be willing to build a position with. And possibly if you want to start a position, here is not too bad if we have a very long-term time horizon, right? I'm not talking about swing trades. You guys know the rules for swing trades, right? You want to do a swing trade, stop loss is down below the low, and you're targeting new all-time highs in terms of expansion of this weekly uptrend again and expansion of the bull market. That's a very easy swing trade, right? But in terms of longer-term shares, whatever we buy here, we would have to take it upon ourselves to DCA and build out a dollar figure. Let's say you want to only put $5,000 total in this company. Try to find a DCA method to buy into it. And then you really have to hold for the technology ramp, the Neutron rocket ramp as well, and just the overall expansion of the company's market cap into its own industry. So keep that in mind, guys. Very nice company. It is a retail fan favorite. I would not be opposed to starting a small position on RocketLab right here, but would it be a very large core holding for me? No, unfortunately not. And are you getting the best risk to reward as people back here got? No, unfortunately not as well, but still a pretty decent bet in my opinion. But it is just that, right? It's a bet because there's a lot of uncertainty in the future for this company, but the management team is very solid. I will admit that. That's everything we had for our 2 earnings rundowns. Hopefully you guys enjoyed. Now, let's jump into our index analysis, shall we? All right, so taking a look at the S&P 500 and the control that we might have established today. So we know that it was in the context of a nice daily uptrend. They cut the lows a little bit. And for the bulls to get this back, well, there's either 2 scenarios, right? The V-shaped recovery, which wouldn't be too crazy because we have been in a weekly uptrend this entire time, perfectly backtesting our weekly EMA. They can do it in 1 shot or they can do it in 2 shots. If you want to speculate whether or not they can do it in 2 shots, you always look at the retracement size. I was saying just last Friday that if we get a retracement size above the 618 fib all the way to the 782, it creates a lot of space off the lows here, guys, that if we falter a little bit, we can fall back into support, set some higher lows, and possibly move a little bit higher. When you take back such a big portion of a move in either direction, guys, if you take back 61% or 78% of a move, it really switches the momentum a lot. So the bulls are looking good here. The context is still a nice weekly uptrend. And as I said, we've undone some of the bearish short-term narratives for the market. So possibly the 7,000 price target by the end of the year is not quite that obscene anymore. Moving on to the QQQs right now. QQQs, same analysis right now. We know there was in a daily uptrend. Very nice. They almost closed below the lows, but Friday's action saved it, right? Nice back test of the 50 EMA. Something on the Qs that we haven't really done. I mean, we tried it once here in September. Other than that, though, guys, we were extended for a very long time from some of these moving averages. The algorithms pay a lot of attention to that. Institutions pay a lot of attention to that. And usually you do get some buying opportunities from that level. It was weekly overbought conditions. It is no longer. That being said, the weekly bulls have never lost control at all. And the retracement size on the daily is quite healthy, guys, right? In terms of this move, in the last 2 days, it's a 618 retracement. So same concept as the SPY, right? If we drop a little bit here into the rest of the week, I do believe it will be a buying opportunity for a reload on some swing trade longs on the indexes or possibly on some of your favorite companies that have come down in recent times as well. The bulls are looking good. So they have a chance to fully V-shape, but they also have a very nice chance for the 2-step recovery process. And since we don't have the bearish catalyst that we had just a few days ago, right? The technicals are no longer stretched. We got our retracement down. And also the fact that the government is reopening, it kind of gives a little bit more optimism in the markets in the short term. So our bias in terms of the narratives has to switch a little bit back to bullish, and our bias in terms of the trends, that was never lost. We were always bullish because the bulls control the higher timeframes overall. Moving into XLF financials still a little bit soft, but we do have a new daily uptrend, which is nice. Into resistance, 53.31 to 52.90. The banks expanded nicely today, guys. JP Morgan, you might remember, we targeted this one for a swing trade on this backtest right here. Perfect backtest and expansion. Take profit indeed was today on that one. And Goldman Sachs as well. We identified this opportunity same time. Backtest right here, coming in to take profit, which is the all-time high territory as well. So financials, not looking too bad. There were some opportunities. In terms of the overall ETF, though, it's kind of trapped, right? Weekly is kind of just stuck. You need a big expansion like beyond 53.41. Give me the weekly uptrend back because we lost it, right? We were just hovering around here. Need to get this back. The reason that I said that this industry was a buy, guys, is because on the monthly time frame is just very clear, right? Backtesting prior resistance, backtesting big support right now. The 12 EMA was down there. So this entire location was a nice buying opportunity, but not only for the banks, for companies like Visa, for companies like MasterCard, which are still phenomenal buys in my opinion, and even some of the other financial players such as S&P Global out of this area of support down there, such as Moody's Corporation out of their own respective area of support. A lot of interesting buys in the financial landscape as of recently. So hopefully you guys are able to get a few of those off in the last week or so. Moving on to healthcare right now. Healthcare, strong push, but once again, a lot of that is Eli Lilly. And you guys remember, I have this chart circled right here. You remember when I was saying this was a gorgeous swing trade opportunity, break out of the downtrending channel, weekly uptrend, back test of the channel, back test of all the moving averages. This is what I like to call perfect confluence. It's when so many things come together to give you an A+ trade setup. That trade was fire, and now that it's broken the all-time highs, the take profit has been achieved. So congratulations for some of you guys if you were able to get that one. In terms of the overall healthcare landscape, though, a lot of it's been done by Eli Lilly and other big pharmaceutical players. In terms of the daily, it is a very nice daily uptrend. We are challenging resistance again. 148 down to 145 is the mark. Still a very beautiful weekly uptrend, but not everything is participating, right, guys? We know that healthcare's come a lot off the lows, but a lot of you guys must still be questioning whether or not these are good opportunities, right? I get a lot of questions all the time. Should I buy UNH down here, right? Should I buy some of the other healthcare players? Well, my answer to all you guys is, well, how much time do you have on this trade? Because UNH and several of the other health insurance providers, guys, is going to be a multi-quarter, dare I say, multi-year recovery story. They will not move very fast. In terms of the government shutdown, there will be no renegotiations on healthcare premiums until January 31st. This is why all these companies have been coming down, right? And also, I'll remind you, the EPS for these companies will not be back to what it once was for years, right? Last year in 2024, EPS for UNH was 27.66. It will not be back up there until 2028. So once again, my question for you is, how long do you have? Sure, there are nice value buys down here, but do not expect these stocks to pull a Palantir, right? It's just, in my opinion, not going to happen. It's going to be slow and methodical, just as these companies always move. So are they good buying opportunities for the very long term? Yes, but you're going to have to be patient for those gains. Moving on to SMH right now. SMH, not too bad either. 3% move higher. Very nice. We had the daily uptrend. The bears came back down and challenged some of these lows, but could not break them. In terms of the retracement size, we're also looking fairly good right now. A 618 retracement, which gives the bulls the opportunity for the full V shape or the good old two-stage recovery process right there, looking very good in terms of distance created. The weekly has pulled back a little bit on the RSI, but we still do trade a little bit rich in terms of right now. But several companies, guys, had some really nice pullbacks, right? Not companies like Micron, they're kind of still on the ceiling. Not companies in the memory landscape as well, like WDC, or a company like SanDisk, which you guys have been probably aware of as well, right? And even certain other companies like ASML. ASML kind of just holding, right? So some of those companies haven't pulled back to tradable, actionable setup locations, in my opinion. But you didn't have to look too far, man. NVIDIA, we were talking about this one at the back test right there. Hopefully you guys were able to position possibly. Beautiful lift on NVIDIA, 6% on the day today. So not all semiconductor names had some beautiful trade entry setups. NVIDIA definitely was one for either a longer term fundamental buy or a shorter term swing trade as well. So hopefully you guys were able to maybe clip into that opportunity. But semiconductors overall, right, not all of them pulled back. So as a result, it is still trading a little bit rich. Any further consolidation might just lead us right down into tagging the infamous weekly 12 EMA. And lastly, moving on to the Russell also bit challenging for the Russell in the last 2 weeks. A daily downtrend was clear as day. The bounce size, not as good as the S&P and the Qs, but it's getting there, right? The line in the sand was kind of this little box area right there. Let me just clear it up for you guys. You can clearly see, right? So much price action down there. They did not lose it. And the weekly timeframes, that also was your weekly higher low. We did not close below. As a result, we did not lose the weekly uptrend. It's just kind of sideways, awkward consolidation right now. And I've been very clear, right? There's only one way to build a trade in the Russell is we would buy some here, and if we get the full retracement pullback into the monthly 12 EMA and the backtest of the full monthly support, which is prior resistance, right? The good old breakout retest, that is where DCAs come in, and that is when you can ride the position into a further leg of expansion. But we don't know if it's going to do that backtest, which is why I say half the position entry size here and maybe half down here, and then you would ride for the thesis of the small cap expansion into 2026 with your interest rates coming down as well, right? Moving on to XLP, consumer defensives. In my opinion, still one of the better buys in the market in terms of how much we've come down and how oversold this one was. So we're starting to curl over a little bit. Nothing meaningful, but look, all this support and the weekly 200-day EMA, 78 down to 75. It is prior resistance from 2022, 2023. It's been current support for all year so far, the tariff lows and the January lows as well. Could be an interesting little swing trade. It's not going to be fast. It's not going to be sexy, but could be a decent position with a stop loss below the lows. Not too bad. Utilities perfectly backtesting the 12 EMA, looking very good for some possible further upside. You guys know the drill, right? Some of my favorite companies in utilities right now are Vistra. I like this shelf that we've been building since the month of June. I'm selling some puts under the market, but I would not either be opposed to building a share position either. This one, Next Era Energy, and Duke are probably my go-to plays moving forward. Special shout out to companies like GE Vernova as well, which are building a very nice shelf of support. These are some companies that I would probably establish a position in and hold them into 2027, 28, 29, 2030, because those data centers are going to need power, whether you guys agree with that or not, right? It's just a fact. They're going to need massive amounts of power. And as a result, you want to go with some very established players on the grid right now. Moving on to real estate also trying to find a little bit of a floor. They've been bouncing around here since the month of May, essentially, and it's kind of push and pull depending on the sector of real estate that you're watching. One that I'm watching very closely, though, because it's a beautiful technical setup, are the home builders. Look at this, guys, right? Big sweeping monthly action to the downside, right? Beautiful retracement size. Look at this retracement size on the monthly, right? That was a 786. It's just what I said on the SPY, right? You get a very high retracement and gives the bulls a chance to go back, create a new higher low, and possibly go for the expansion. Look, we're back testing right now, back testing support. It's been a very nice retracement so far. We are slowing down into it as well. We are using this area as support. So this is possibly one sector of real estate that I would not mind positioning in for leg number 2 into 2026. So pay attention to that, but also shout out to the mortgage companies. I think the mortgage companies, after this leg of consolidation, such as RKT, could do pretty well, and as a result would not be a bad trade either, in my humble opinion. Moving on to the VIX right now, the VIX down about 8% on the day. Friday was the big volatility day. I was telling you guys, when the VIX is high, it's time to buy, and a lot of that is with short puts, right? Selling puts under the market, and you get some fantastic premium and you get some fantastic distance. We got some really nice orders off last Thursday and Friday when the markets were dropping a lot. Hopefully you guys did as well. But at 17.6, the VIX is still decently high, enough to sell some short puts on some names that are lagging behind a little bit. But of course, now that we've lifted the volatility catalyst of the government shutdown, the VIX, I wouldn't be surprised if it just comes right back down into the 16s. In terms of yields, guys, yields really aren't doing too much at all. It's very slow. We know that because Jerome Powell threw some cold water on the rate cut probabilities for December. I still think they're going to cut. The market still thinks they're going to cut, but it's not a sure thing anymore. I'll remind you, this ratio of probabilities for a cut in December was like 90 to 95% leading into the Fed's meeting a few weeks ago at this point. It's now in the 60s. So obviously your 10-year yield is sticky right now, and the 20-year yield is sticky as well. And I think that until that December meeting, we're just going to kind of hover around. And so I really don't think we're going to find any bond trade expansion, neither from a fear bid purpose because the bearish catalysts are coming down one after the other, and nor either from a accelerated rate cut theme either. So the bonds might just still be very, very slow. So keep that in mind. Moving into gold, gold actually breaking structure to the upside, and this did fulfill one of the trades that I was telling you guys about, right? It was a daily downtrend, nice move, and we were looking which way was this range going to break to the upside, and you have a swing trade long with a stop loss below there, and then a take profit up towards the highs, and take profit number 2, 4,500 psychological level. That trade was available very early this morning, and it kind of carried all the way through. Here is your market open, and look at the follow through. So very easy if you're in that trade right now to now set a clean stop loss pretty much at your break-even entry level, as opposed to being all the way down there right now. So we got the follow through. The MACD is looking good. Next target for weekly expansion would be back to your previous all-time highs around the $4,300 and then $4,500 range. We'll see if it happens. There's always a chance that they do this, right? Just like they did back here, but we'll see. As of right now, the trade setup is still looking fine. So hopefully you guys are able to manage your entries. We were talking about this for the last week and a half, watching for the break of structure and the entry and the stop loss. Nice lift at the current time right now. In terms of your crypto name, so crypto, I mean, doing all right today, right? So the Monday session, we saw Bitcoin go up 1.25%. The end of the government shutdown definitely helped that. We had a daily downtrend. Now it's up to the bulls to give us a new daily uptrend back and put in some motion on this weekly, because the bulls have kind of lost the weekly uptrend as well. But guys, to be honest with you, it's just sideways with a slight bearish consolidation pattern right now. The clearest indication is support 107 down to 99. And the monthly time frame, guys, is the one that I kept telling you guys to pay attention to, right? Monthly uptrend. And when we were here, I was saying if things, if push comes to shove, we may just backtest this 12. The same thing we've done all 3 prior times that we've done this monthly consolidation, looking for a possible expansion into Q4 and Q1. So I'm still a fan of building some Bitcoin positions right here for a shorter term swing trade. Stop goes below the low right now, and you are targeting expansion towards the highs, but also for some long-term exposure as well. Ethereum, kind of the same setup right now. Big daily downtrend. We'll see if the bulls can actually get this back and challenge overhead resistance around 4,000 to 3,700. It's an area that we had resistance in the past. Big support from the bulls, and then we lost, right? So Ethereum is kind of in between 2 levels right now, but the monthly consolidation was something to pay attention to. We were saying on the channel, this was a first entry opportunity, but just save some money for the DCA. Both of those trades played out. So if you guys are accumulating some Ethereum for a possible next bull leg higher of expansion for your Ethereum thesis, it might still be a decent time to accumulate the position. So moving on, that's everything for your market rundown. Hopefully you guys enjoyed. Now let's move into our big tech names. So moving on to good old Apple, number 1. So Apple, very strong performance, but very tough to chase up here as well. Nice performance by the bulls, though. Daily uptrend, your higher lows are pretty much down here, 267. You lose this, you lose the daily uptrend, and you go into very natural weekly consolidation. A next possible swing trade entry could be down here around the 12 EMA pocket, which does line up with your previous all-time highs as well, and some little resistance areas, which will now be support. So that would be a nice confluence trade. But as of right now, going for Apple on the breakout, very greedy in my humble opinion. In terms of your fundamentals, guys, fundamentals are looking good. We got some really nice guidance for Q4, but I'll remind you guys, the valuation of Apple up here is quite expensive. So is Apple a buy for me up here? No, but it is a hold in my opinion. I'm definitely not selling any shares. Moving on to AMD right now. AMD up 4.47%. We know that they almost lost the daily uptrend, almost cut these lows, right? Beautiful daily uptrend, full retracement. Now it's up to the bulls to prove it to us. Can they get this back? A nice 50% retracement so far. You'd like to see them push a little bit more into tomorrow to get that 618. If they can get that, well, you have a nice chance at either the V-shape or the 2-stage recovery process, right? So if they pull back a little bit more, how you structure the swing trades here are, you get a nice bounce, you structure the higher lows, then we can put a stop loss below here and go for the possible trade expansion because we still have a weekly bullish bias. The bulls have not lost the weekly uptrend, just some very nice weekly consolidation. We are off of the 12 EMAs, so it is still a greedy long trade, but the long-term valuation still makes sense for some upside expansion, trading at a 38 forward price to earnings, a 1.09 peg, and a 9.55 price to sales with fantastic revenue and EPS growth rates into the future. And we did cool down the weekly time frame, so AMD still one of my favorite bets in terms of a stock play into the next 1, 2, 3 years. Moving on to Amazon right now, we know that Amazon did a perfect backtest of the previous all-time highs, which was resistance, now support. They backtested it last Friday. So very nice time to be selling some puts down there. Now Amazon is maybe looking to go for a little bit more. Beautiful daily uptrend. Higher lows are set down here at 238 roughly. In terms of the retracement size right now, it's good, right? 618 bounce. They never lost a daily uptrend. They didn't even pull back that much either. The weekly time frame makes the most amount of sense in my opinion. If for every which reason we come back down here, you guys know what to do, right? It is a nice opportunity to sell some puts or for some possible swing trade longs into support. It's a setup that I like very much. In terms of your long-term fundamentals, solid, right around 250 where we are right now, guys. It's a 33 forward multiple, price to earnings, and a 1.64 peg. I still think there's a lot of meat left on this trade or on longer positions. My price target for Amazon into late 2026 into 2027 is like 280 to 300. And I think that might indeed be a little bit soft. Moving on to Google right now. Google, strong day, 4% to the upside. Higher lows are set 276, 275 right now. They've been holding this bull flag. While the market was pulling back and doing a whole bunch of nonsense in the last 2 weeks, Google's just been holding the highs, man. Google Bull's really strong right now. The weekly is very extended as well, though. Beautiful weekly uptrend, but we are so extended from this 12 EMA. It is an extremely greedy long up here on Google, right? That being said, Google for me right now is a hold or maybe a slight nibble in terms of long-term fundamentals. At 290, you're trading at a 27 forward price to earnings and a 1.79 peg. So definitely not as cheap as when we were back here. And I was saying it's still a nice buy with some good risk reward premium there on the fundamentals, and definitely not as good as back here when the stock was trading at like a 16 forward price to earnings. So Google remains a nibble for long-term shares and for DCAs down into the 200s if we go back and pull back into the 12 EMA, which it'll do at some point, right? But for swing trades up here, very greedy long in my opinion. Moving on to Meta. Meta, in my opinion, is one of the better buys in the market right now. In terms of the daily timeframes, flush after earnings, big oversold conditions that we have not seen since the April tariff lows or since the 2022 lows all the way down there, man. Can you imagine? Only twice in the last couple years has Meta got that oversold that quickly. That being said, looking nice. We're getting a little bounce here, but we can't say the bottom is in. You need to give me a nice retracement size, 50%, and then maybe establish some better price action structure. Then I'll be able to say, yeah, okay, your weekly lows are in, and we might just be looking to reverse this weekly downtrend into something better and go for a monthly leg of expansion. But this pullback is very solid if we're building longer term positions, meaning leap call options or longer term shares, right? A very beautiful backtest and cut of the 12 EMA, which Meta does not do too often. And around 630 where they are right now, the valuation makes a lot of sense. Low 20s price to earnings and a 1.63 peg. Solid for this company. One of my favorite plays in the market right now. Moving on to Microsoft. Microsoft also bouncing out of its support range, which he almost lost. Nice initial bounce right here using support, but you know, the bulls lost all the price action structure, right? So no more daily uptrend. They have to fight to get it back. The weekly is not looking terrible. They did lose the weekly uptrend as well. But we're desperately holding on to support and desperately trying to consolidate this monthly time frame sideways. Maybe the 12 EMA will catch up to the price. If not, if we come back down and we back test it, 475 is a great entry. Arguably 500 down to 475 now with the updates on guidance and whatnot. It's not terrible in terms of valuation, right? So I did add a tiny little fraction of Microsoft shares today, and I will keep adding through consolidation through the 12 EMA. Swing trades right now in Microsoft, it's kind of a bit tough. I would like to see them get better daily action structure just so I can clearly set a stop loss below this level, right? Because as of right now, we don't have confirmations, and I'm not the biggest fan of just guessing that the price will increase without any confirmed trend changes on the price, so keep that in mind. Moving on to Netflix right now. Netflix challenging resistance. 1150 down to 1100 is the resistance range. It was a daily downtrend. The bulls looking to get a nice retracement size going in relation to this move down. So let's see, can they change the trend and reclaim support, which will put an end to this weekly leg of downside in this weekly downtrend? We will see, but there should be a lot of trading volume coming into Netflix over the next week because they're having their stock split, guys. Monday morning, you guys will see Netflix at around $100 per share, and that will probably trigger a lot of options volume in the stock. In terms of a long-term buy, it is a long-term buy. I've been very clear on this, guys. The $1,100 range down to about $1,000, right around this 12 EMA that Netflix enjoys testing, right, in the context of bull markets. Very attractive, and also fundamentals-wise, very attractive too. Around 1,100, we're trading at a 34 forward price to earnings, a 1.7 peg. not egregiously valued in my humble opinion. So I've been adding Netflix shares during this decline. Moving on to NVIDIA right now. NVIDIA, such a solid technical move, but also in terms of valuation, it is quite good. So NVIDIA, they gave it all back, right? The daily downtrend into the big weekly consolidation. But we were talking about it. If NVIDIA consolidates after its GTC event and gives us a back test, that is kind of like last chance to dance on this stock, in my opinion. It's looking really good for some expansion, both on the weekly and maybe even for some further monthly expansion as well. The valuation around 200 where we are right now is currently between a 1.25 and a 1.4 peg roughly. And that is with improved guidance, a new $500 billion revenue guidance over the next 6 quarters. You will get to hear from NVIDIA when they have their earnings Wednesday, November 19th, but still a decent opportunity. Well, this was the best. And let's be honest, guys, you missed it, right? If you missed it, you missed it. But is it still a good buy for long-term here, or possibly some swing trade longs with the stop loss below here? Longer dated swing trade long into maybe your 225 and 250 psychological target of expansion? Yes, right? But just don't get overly greedy with this one. On to Tesla right now. Tesla, 3.6% to the upside, still trapped in the gulag. So we lost the daily uptrend momentum into the all-time highs. It's a downtrend now. Focus on the weekly time frames. This is just sideways consolidation, right? In my opinion, it is a bull flag with an upward bias because the market has an upward bias and Tesla will probably not get left behind, even though it does trade at pretty rich multiples right now. Elon's pay package was approved just the other week, so that's another positive catalyst. But in the event we fall back into support, guys, this would be a better entry in my opinion. 405. Done about 379. I know that certain people on big red days enjoy selling puts on Tesla down there. Not opposed to doing that either, but this back test would be like picture perfect entry. It would catch up to the 12, nice back test of support, and then maybe for a nice swing trade long. If you're taking it right now, you're basically saying, you know what, I'm not going to wait for it. I'm going to go for the pure breakout. So maybe you can structure it in 2 ways. Some here, some down here as you go for monthly consolidation and then further expansion maybe into 2026. Moving on to Palantir. Palantir, what a move on Palantir today, 8.81%. We were talking about this on the Friday session where we were saying, you know what? It's a very greedy entry long right now because they didn't lose the daily uptrend. They didn't lose the bottom end of support either. If you were to take this swing trade long potentially, right? Whether it's here or whether it was the end of the day on Friday, the stop has to go below the lows. And then you were targeting expansion levels of psychological, right? 225 potentially is your next target. Palantir did a great job on the weekly of back testing the 12 EMA, back testing the breakout, retest, and maybe now looking for the run. So Palantir looking very good. It's not a fundamental trade because the fundamentals are very stretched right now. If you're buying Palantir up here, you have to be doing so with a 5 to 7 year time horizon in mind. You're buying the story, of course. Fast growing SaaS company, one of the best earnings reports that I've seen. Arguably one of the best software reports that I've ever seen in my career, right? So very, very solid move right there. And now maybe the bears are left a little bit in shambles. Everybody was anticipating the breakdown, but might just not break down just yet. So the technicals are looking pretty solid overall too. Moving on to SoFi right now, a very nice push on SoFi the last 2 days. I mean, geez, the lows of Friday, we were literally at 25. In 2 days, we're up almost 20%, right? Crazy moves on SoFi. They lost the daily uptrend. And now, big engulfing move, looking to get this area back. This is roughly 30 down about 28 area of support, looking pretty good. What they did is they gave us a new weekly higher low, right? So looking very good here on the weekly low, back testing the 12 EMA, something they hadn't done in like 5-6 months. And now possibly looking for the expansion. So if you're taking a trade on SoFi from here, it's a very greedy long in my opinion, but it could make sense for the breakout. They've been consolidating here for like a month and a half, 2 months. You can see it best on the weekly. You might just be looking for a leg of expansion. The target would be roughly 35 psychological, around 30 bucks if we're just looking for longer term shares. The stock does make sense. It's still trading around a 1.22 peg. Moving on to Uber right now. Uber also looking pretty good in terms of the technicals, guys. The bulls did a fantastic job through all of the market volatility recently. We did not lose the infamous $90 area of support. We might be looking for a little bit more. If we're taking a swing trade here, stop loss goes below the lows. And we are targeting expansion right now beyond $100 and then psychological numbers, right? 110, 120, further expansion overall. The weekly doesn't look too bad. As I said, it's been consolidating here for a better part of the last, 3-4 months overall. Looking good. The price action is getting very tight. So this one could be a nice opportunity for either a swing trade or maybe even some leap call options that if I would buy one here, I would be patient and wait for a DCA trade into the lower 80s if ever the markets break down. I would definitely not go all in here, but it's a nice entry possibly for some leaps, just going for the expansion of the fundamentals of the business. 1.64 peg right now, decent free cash flow yield, and the numbers that they put up for trips, bookings, mobility, and delivery were fantastic, let alone the amount of free cash flow and the amount of buybacks that they're going to do as well. Looking like a decent setup, guys. It's somewhere between a casual long and a greedy long, in my opinion. The best long would be down here, but we're not too sure if we're going to get it. When we're not too sure if we're going to get it, you got to break the trade down in two, like we did with Ethereum, right? Some here, and then possibly save some for down there. But Uber is looking pretty good. Moving on to TSM right now. TSM with a nice bounce off the lows. It was a daily downtrend. You cracked the lows temporarily, and now we're back. It reminds me so much of this consolidation period right there, where we established a quite wide range with a bearish leaning bias for some consolidation. On the weekly, you can see that even better. Very nice range being established, back testing the 12. You remember up here I was saying, wait for the 12 to come back into play. It came back into play. And the monthly, the monthly is stretched, let's be honest, right? But at least in terms of short-term price action, we have a tradable bottom. If we're looking to trade this bottom right here, stop loss will go below the lows, and then you are targeting psychological expansion, 325, 350 on TSM for some possible swing trades into the end of the year and into Q1 of next year at 295 for a longer-term portfolio. Is it still a buy? Yeah, it's under a 30 price to earnings on a 1.68 peg. Not the best valuation, not as good as we got back here where it was a screaming buy. And all throughout here, I was saying it's a screaming buy as well, but it can still be a DCA. So for me, it's a DCA, it's a nibble, it's definitely not a sell, and I'm definitely not selling NMA shares. It's a hold and a DCA trade for me. So that's everything I had for you guys for today's market rundown. Hopefully you enjoyed. Now let's move into some of our biggest gainers and losers. All right, so let's take a look at the biggest losers. Oscar Health coming right back down into the depths of support. 14.5, 15, let's call it, down about 12.5. If we are looking to build a position on Oscar Health, I do believe this is the area to do it. I've been playing this one pretty actively every time we come down, here, we can find some short puts down into there, but now definitely I'll be kind of playing my hand at some short puts, 14 down about 12. Not too heavy of a position for me, but could be a very nice accumulation range. For the stock, it's been a nice area for this stock over the past year and a half. SMR, if I'm going to be completely honest with you guys, I'm not really interested. You can argue that it's right back into the 12 EMA monthly, previous resistance, current support as well. But I'm going to be playing the other energy providers, right? Because SMR has a bit of an uncertain future revenue profile, I'll be kind of favoring the other plays. Nuclear is fun. Of course, it's fun, but there's other companies that have nuclear as well, right? You could talk about Vistra. You can talk about Constellation. We can talk about Duke Energy, which does not, but still, a lot of these stocks have very nice weekly uptrends, monthly uptrends as well, and are back testing some support areas. Like look at Duke, right? Look at Vistra establishing a nice shelf. And if you get the full retrace down to 175, it would be a super solid entry in my opinion. Names like Constellation, right? They back tested recently. So I'm going to be favoring the names like this that have actual revenues and actual very large presence on the grid. Moving on to Duolingo right now. Duolingo, the only thing you need to understand about this name is this little chart right here. I talk about it all the time. Sometimes you get some stocks where the technicals don't matter anymore. It's clearly oversold. The fundamentals don't matter anymore, although this one still trades a little bit, on the high side, right? It's a 1.34 peg. It's a Ford 43 price to earnings. Good revenue growth, though. The valuation, though, doesn't matter. Not many people seem to be buying it right now, so the fundamentals are off the table. This is a sentiment trade, right? We explained what happened on their earnings just last week, so if you guys want to know further opinions on Duolingo from me, definitely go check it out. The only thing you have to understand, though, is if you're buying down here, guys, you're buying into a multi-quarter recovery theory, right? That being said, the price right now is crushed, weekly oversold, daily oversold too. If we wanted to DCA, it would be here all the way down through the mid 100s overall. And then you're just going to have to hold for the recovery story of the business. They're still growing monthly active users. They're still growing revenue. They're still growing EPS, and they're still growing margins. However, the management did say that, listen, we're going to kind of favor user growth, organic user growth, and just investing in more modules for people to learn rather than monetizing our users right away. And the market did not like those comments at all. So this will be a show me story. Now the stock has to show that it can disprove all the haters, all the theories that AI is going to overwhelm their business and that their monthly active user growth is finished and whatnot. So if you're investing down here, man, don't expect a very quick SOFI or Palantir recovery at all, because you're going to have to get away from negative sentiment. And in my opinion, that only happens as you build onto further and further positive quarterly earnings. This one might still be a little bit of dead money throughout this further quarter. Moving on to Iris Energy. Iris Energy for me is a buy, especially down here, 60 down to about 52. It's a bit of a greedy buy in terms of the technicals because we haven't pulled back too much. But down here into the 12 EMA, I would be a fan. We are still weekly overbought. We are still as well monthly overbought conditions. And the 12 EMA on the monthly, it's going to have a hard time catching up, man. Kind of like Palantir, right? But we did cover their earnings. This is a longer term buy. What you're looking for them to do is expand their contracts, essentially, right? Their amount of money that they've locked up for gigawatts of power. They have a ton of space to onboard new potential clients. We will see if they can do it. So this one will move on the announcements of new deals. We did the valuation in the low 60s after earnings last week. It's not that bad, but if you're investing in this stock, you will not get as good and as quick returns as people back here, in my humble opinion. But if we're holding this as part of a portfolio for the next 12, 24, 36 months, the expansion of data center offerings, I still think it's a good buy and DCA, and then you just have to wait for market cap expansion, which is the thesis. Only trading for 16 billion in market cap, but they have a huge backlog. And keep in mind, guys, they have a lot of current, power that they can possibly do, right? Like 3 gigawatts is what they currently can do online right now. If I'm not mistaken, if I remember my numbers correctly, I think they only currently have a run rate of like 500 million, or 500 megawatts right now. So you can still have like let's say 3/4 of all their production capacity to be coming online shortly that clients will be able to bid for as well. So Iris Energy, probably one of my favorite plays. I mean, we can lump up NBIS's earnings tomorrow. I'll cover it for you guys tomorrow. NBIS, also a solid play, like low 100s down to like 90s is a pocket that we could accumulate some shares. Once again, market cap, longer term expansion play, just like CoreWeave. So I do like that entire niche of the market, and it's been nice to see them cool down a little bit and provide those entries. Cheesecake Factory, I mean, we'll talk about Cheesecake Factory, but we'll talk about the entire sector at the same time, right? What I'm doing and what I told my Discord members over the past 2 weeks is I'm only going to go for the easy trades, especially for trades, right? Duolingo is not an easy trade anymore, right? UNH is not an easy trade because the narrative is clouded by so many different things. Cheesecake Factory is also not a very easy trade. It might be a great company. It might have somewhat low multiples right now, but it's not an easy trade. Why? Well, what have the other players in the restaurant business told us so far? CMG, struggling. Texas Roadhouse has also been somewhat struggling. They've commented on discretionary spending coming down, so you cannot expect the same revenue growth rates, right? Names like Wendy's, same concept. Names like Kava, same concept as well. These are not easy trades. And let alone that, let's talk about Nike, right? Some of the other discretionary apparel plays. Nike is not an easy play. Not only is it a big recovery story for the company's execution, but consumer discretionary spending. Lululemon is not an easy play, right? Other names as well, such as, let's just say Decker's Outdoor Brands. They're not easy plays. Anything consumer discretionary. Maybe if we buy them here, we could be rewarded sometime when the narrative turns around. Consumer spending is going to have an uptick and people are going to have to feel better about the economy overall. And that might only come in 2026 and maybe even 2027. The guidance from a lot of these companies, guys, is not the best. And they are, especially the apparel brands, they're being affected by the tariff situation as well. So these are not easy trades, guys. For longer term positions, sure. But for trades, the last thing that I would want for you guys to do is bid these as trades, right? While the entire AI narrative in semiconductors and other names in nice weekly uptrends, nice monthly uptrends, when all those names are running nicely in uptrends and we can set defined stop loss areas, you guys are focusing on the area of the market that is just too uncertain, that is just not working right now. What are we expecting for Chipotle, Cheesecake Factory, and all those players to have a rapid recovery back to highs as if none of this ever happened? Probably not. These are all going to be very longer term bets that you can make with the market, but consumer discretionary is just not my favorite place to trade right now. I need plays with very clear narratives. UPS, unclear narrative, right? They cut a bunch of personnel, a bit of execution problems right there. They're trying to turn around, but execution problem in the business. I mean, Target, same concept, right? Names like Restoration Hardware, same concept. There's so many names out there that although they're crushed at multi-year lows, guys, I would rather be late and wait for an actual confirmation of either macro data or sentiment around these companies, or we can clearly see that institutions are willing to bid them. Because as of right now, you're literally just buying a whole bunch of what, in my opinion, is commonly referred to as value traps. The last thing you want to do is load up your portfolio with a bunch of stuff like Target and a bunch of stuff, and consumer discretionary, and miss the entire second half of the AI rally. I'm just not the biggest fan. Moving on to Axon. Axon, for me, we covered them after earnings. Axon would be a little bit of a nibble down here for a longer term bet. If something you're interested in or you already have, it would be a nibble down here into the 500s. We covered their earnings last week. If you guys want to go check, definitely go check that out. And I think that's kind of like everything. We covered so many different themes during the course, over the course of this video. Financials when we did the indexes, healthcare when we did the healthcare plays, right? Energy when we covered utilities, we covered them again just now, like Vistra and Duke Energy and things like that. We covered the neo cloud providers like NBIS, Iris Energy, CoreWeave. I'm a big fan of those. And I think that's it. And I also just went over some of the themes that I'm not willing to play right now. Now, moving on to names to the upside, Open Door, this remains a lottery play. The same as it was back here, the same as it was during this entire phase. You only put in money into this company for what you're willing to lose. They literally just had earnings and they were not too good. It's a longer term play you're going to need for the real estate market to pick up into 2026. If you really want to see this one get some lift, only put in the amount of money you want to lose. MP Materials, a bit mixed on this trade. Sure, they're off their lows, guys, but once again, this is a stock that it's a narrative, right? You remember USAR? The narrative has been unwound. Quadruple U's, the narrative has been unwound. Is critical minerals a thematic trade, and will there be expansion of critical minerals in the US over the next 3-4 years as we reduce our dependence on China? Yes, but once again, you are pricing in 2028, 2029 revenues now. So the narrative has kind of run ahead of itself. Can we maybe position small on these big pullbacks? Yeah, if it's something that you want, but keep in mind, you're going for like a multi-year thesis, right? When people pivot away, when there's no more government money flying around every single week, when the China tensions are now down, well, obviously that trade is not going to have the same lift as when that's all people are talking about, with the China news as well, right? So keep that in mind. Elf Beauty, we covered them after earnings last week. Elf Beauty is a buy, both from here down into these 60 lows. Could be nice for some out of the money leap call options as well. Deep 2027, because this is consumer. But if I'm playing something consumer, guys, I'm going to play something consumer where people trade down, where there's value, where their products are cheaper than industry competitors. And as a result, they might be the best performing company in an otherwise unfavorable narrative and niche. Elf Beauty is that style of company for me, which is also why if I'm looking for quick service restaurants, I'm bidding McDonald's, right? I will take the best performing company and the company that consumers trade down to when times get rough. And Elf Beauty is that style of company for me. CLH as well is arguably a buy too if you want to sell some short puts down here in the 40s. I think the valuation now makes a lot more sense, low 40s, than it did up here in the mid 60s or even higher, right? CLH, not a bad time to position as they expand their market share. But once again, this is also somewhat consumer discretionary. So keep that in mind. There's not very high switching costs, is there? For people to switch away from Celsius to something else. There's like 5,000 energy drinks out there on the planet. So keep that in mind, right? They don't really have a big competitive advantage, but what they do have is decent revenue growth rates. And I think, guys, that's kind of it. Oh, another one, a few more that I want to run into right here. Grab, man, I like this one. I do like this one a lot. What we're seeing right now is a beautiful monthly back test. They back tested this level, 550 after earnings. And you might just be looking for a bit more as the business expands its offerings, $7, $8, $9, $10 over time, right? It's not going to be a fast play, but if you ask me for my two best, let's just call it food delivery / ride sharing services, Uber and Grab are probably my top two. So this one would not be that crazy for a bit around these levels, looking pretty good as a matter of fact. And another one that I want to cover are two more. Reddit is solid in my opinion. They gave the full retest, guys. You might have missed it down to 175, but that was a nice monthly backtest, establishing some monthly higher lows. And even up here at 200, if we're looking for longer term share price expansion, we covered it after earnings, guys. The valuation is not that high at all. Reddit is indeed a buy for shares through here as a DCA process, and then you just go for expansion into 2026, into 2027, and you count on them to keep crushing their earnings results, which they have been doing. And last one, you got to talk about Mercado Libre, man. We covered their earnings just a few weeks ago. Beautiful area of support, guys. Low 2100 down to about 1900. A beautiful pocket for a nice monthly backtest before a further rally. This company has insane growth rates, an extremely attractive valuation, and that was at 2300. We're now at 2000. So shave like 10% off of this. You're trading really cheap for this phenomenal company. Probably one of my favorite growth stocks with large competitive advantages. In my opinion, this is like an easy trade. And even Airbnb arguably is an easy trade too. Down here, sub 120, we covered them after earnings. Easy trade as well. Even booking.com, right? This one for a longer term portfolio, looking for a backtest here of the prior support range, a backtest of the 12, which booking.com often does during a bull market rally. Those are all easy trades, clear narratives. Travel, not slowing down. We heard that from the credit card companies, and we heard that from these companies themselves, right? So I'm going, if I'm playing consumer discretionary, I'm playing travel or names like maybe Elf Beauty or names like McDonald's, but I'm not playing the bottom of the barrel stuff, things that are uncertain, right? So those are the ones in consumer discretionary that I'm playing. Otherwise, I'm going to keep playing some of the favorite AI names in weekly uptrends and monthly uptrends where most of the retail flows are happening. So that kind of wraps it up. Obviously, there's many more ideas, but we only have so much time in these videos. That's everything I had for you guys today. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing as well if you're new. And lastly, but not least, if you have any questions, please leave them down below, guys. That's it for me. Take care. See you guys tomorrow after the close. Peace.